Bankole, great to have you on the show. Now, two things I pull back, a marginal pullback in yields of bonds and the market experiencing a lull in demand. What's your take?
Okay, basically, we did not expect yields to drop below these levels because usually most counterparties would benchmark, of course, their cost of funding from around 12% to 14%. Of course, MPR is at 12. We had seen a decline of yields from about 16.3% from in August to the levels they are now, around 12.9, let's say average of 12.5. But last week, we saw 11.9 on a particular maturity 2019, bond maturity 2019. What we've seen is that we've seen a marginal pullback in yield. It's above 12% right now. Some, in fact, have trailed back to 13%, basically. What has happened is that counterparties have been full on some positions already. Most persons have bought, or most institutions have bought these bonds whilst they were very, very, very high. Some would like to take profit towards the month end, and I know that some will hold their position in anticipation of the listing of these bonds at the JP Morgan government bonds index.
Well, Bankole, give me a picture of what's happening in the T-bill market then. We're seeing yields down there as well, and traders say we see a correction in the yield curve.
Okay, as at last week, T-bill yields were higher than bond yields because there was a lot of activity at the bonds end, and there was a bit of quiet on the T-bills market. But during the week, in fact, on Monday, calendar for T-bills issuance into the next quarter was released. Of course, this allowed people to plan how much they wanted to invest in T-bills. And then even we've seen the local market and counterparties, even individual investors going back to, investing heavily into T-bills. So by the time this calendar came out, it was obvious that the government wasn't needing more, and the amount that were going to be sold were not increasing. It just sends out one message that, people should go long or continue to buy at this yield because there's possibility of further drop in yields. Of course, usually bills yield will be lower than that of bonds. So we've seen a correction in the sense that we saw a drop in the yields yesterday, but as at close of today, those who probably bought sold down to take profit, weekend, going into month end and all that. It's still a lot of speculation happening in that market.
So in terms of your outlook, Bankole, what do you see in terms of yields going forward in the short term? Do you see them continuing to trend downwards?
Well, towards the end of the month, in the next 1 week, you're going to see some counterparties sell down to take profit, basically. Some people have bought for speculative reasons only. Some are holding long in anticipation of what we've discussed earlier, basically. So in the next 1 week, we'll see stability and a little bit of rise in yields, especially on the bonds side of the curve. But for T-bills, it's still quite active. Funds have been released into the system today, and we expect demand to be very high for T-bills. In fact, the government itself issued OMO bonds, but they didn't sell. They called for an auction for OMO maturities for 55 days and lower than that, but they didn't sell because people were very, very high on the yields as quoted.
Well, Bankole, next week we're having the regular bi-monthly debt sale. What is your expectation for stop rates then?
I would see stop rates around between 12.5 to 13%. In fact, it's like a very parallel yield curve from bonds to T-bills. We're seeing yields between 12 and 13, basically. Nothing more and nothing less for now, basically.
Well, let's talk about the FX market now. Certainly looking at the WDAS auction, we saw the CBN auctioning 180 Monday, 180 today as well. Give me a picture of what you see happening in that market, in the money market, and of course, how it's all impacting on our currency.
Okay, in one word, what's happening in the FX market is simply stability. What has happened is that the CBN has seen that there was a lot of influx of dollars in the last 1 or 2 months, and oil companies also are not long on their positions on their earnings. Their foreign exchange earnings are being sold on a weekly basis. I know Shell sold over 100, and Chevron sold over 100, and Shell sold an amount that was undisclosed. The stop rate at WDAS wasn't changed. We've seen some other companies come to sell very minimal amounts because they don't want to hold them. There's tendency that Naira will strengthen. We don't see a major, strengthen position, but we see Naira being stable at where it is, so you'd rather get out of those positions and hold the Naira for now.
Okay.
Just more.
Well, thank you so much, Bankole, for giving us your take there. Bankole Odusanya, fixed income trader with UBA.